Good morning all, I hope you had a great weekend and welcome to this morning's video. So I have 4 pairs on watch today and those are West Texas Oil, Aussie Kiwi, Kiwi Dollar and Dollar CAD. So I'm going to start off, I'm going to break down my favourite of the bunch to start with, which is West Texas Oil. So if we just zoom out to the higher time frames, we do top-down analysis. Those of us who trade the Falcon strategy and people in general who trade professionally, not the amateurs, they're doing bottom analysis. Okay, we need to be in alignment with the money flow and the bigger players, and those bigger players are looking at the higher time frames. They're not camped out on the lower time frames. So on the higher time frames, I can see that we have this high here. We near miss to it. What do we know about these near misses? So we near miss to this high. Usually we come back up, tap the near misses, usually break above, and then move to the downside, and usually that move is very aggressive. Okay, if you think of these lows, we have a similar thing down here. We break this low. Okay, what does this represent? Many people, you can actually see evidence of that here. We break below that low, it comes back up. People think this is a retest to get short, and that doesn't mean that you can't make money here, but you're constantly capping your profit potential if you're doing that, because the majority of the time, while people think this is a retest to go short, what usually happens is it breaks below. The bigger players see this as a bargain area of value for a buy, and then it moves to the upside aggressively. So we want to be in alignment with the money flow. And of course, if you're constantly selling the lows and buying the highs, as people did here, then you're capping your profit and running the risk that price will just do that, which is what it does the majority of the time. Okay, so if we just delete that, you can see we came back up, filled this wick, came back down, price left a bit of a footprint there. We came down, noticed that we near missed to these lows here, which is why I've got a ray line there and why I've got a ray line at that low. We then come back up, we tap into this area, break just above, tap out all the orders, and then move to the downside. So at this moment in time, I'm just seeing this as a potential impulse correction continuation to take out this low that this low near missed to, and this low which this low which this low near missed to. Okay, and if we just measure the impulse, okay, that's the wrong tool. Let's try and get that off. Right, so if we just measure the impulse, okay, so what I'm doing here is I'm measuring from here to the base, and then we assume that the continuation leg out is of a similar length. That would actually take us all the way down to here, which mathematically lines up with this low here. Whether we're going that low remains to be seen, but what we certainly can be capitalizing on is this slightly lower time frame move. Okay, you can see even on the weekly chart that we have moved up to this area in a non-progressive way, suggesting a more impulsive wave to the downside. If I just zoom in, you can see we have the same psychology repeating itself over and over again. We leave a footprint, we move to the downside, come back up, leave a footprint, come back up again. We near miss to that area of value, move to the downside, but the orders that are still up there and the orders that are being placed in that area are dragging price back up. We near miss to this area again, so we see an impulse, but once again, the orders that are still up there and being placed in this area drag price to the upside. We see price then running out of momentum here, and then what we typically see is the last leg tends to have a little bit of impulsive momentum, which you can see by way of that daily candle there, that last daily close. I like the fact that we have just wicked above it. That is giving me early signs, that wick there, that we have washed out all of the orders. We never know exactly what's going to happen in trading, but that is giving me an indication that we've washed out a lot of the orders. A lot of the time, these big bullish candles with a wick above them, a lot of that wick often gets filled if the candle is bullish. You can see that that's happened here. We've filled some of that wick. Whether we fill all of it is another matter. But you can see we're stalling in the right area. Okay, we even had another near miss here. I like the fact that we also have this 1, 2, 3 last leg. So we have this overall non-progressive price action leading into that area. We have this 1, 2, 3 leg there. We've kind of fulfilled quite a lot of that, about 80%, I would say. We have a near miss to that low, a near miss to that low, and this is an area, although I would anticipate it price potentially keep going if we got down to that area, this is an area where I would anticipate a lot of profit taking. So that would be my target rather than sitting through price consolidating for a period of time. So with all that in mind, what I'll be looking for today, we do have to remember that, we do have an impulse here, okay? And this could be an impulse correction continuation to push higher. I'm not quite sure where it would be going to, because the next high would be all the way up there. But regardless, we could be seeing that. So what I'll be looking for in this instance, particularly as prices consolidating, normally we wouldn't see it this high up if we were just if we'd just washed out all the orders. So with that in mind, what I'll be looking for is the following. I'll be looking for price to drop below this area of inflection there, okay, or area of interest, whatever you want to call it. So I'll be looking for a break below there, so a 1 hour impulse down below the area of interest. If it's a 2-touch 5-minute continuation, so 6 to 8 corrective 5-minute candles, then I would look to get short with a reduced risk entry on the break. If it's a 2-touch 15-minute consolidation as a continuation as a minimum, then I would look for either a 5-minute risk entry within it. So if on the 15-minute chart the 15-minute consolidation was structured, when I dropped down to the 5-minute, if it was structured, I would look to get short with a 5-minute risk entry within it, or a reduced risk entry on the break, and then I would be able to manage it down to these lows for something in the region of 3.5%. Okay, and then what I would do is I would be looking to get out in this area here, and that would be a profit potential of about 9.5%. And I would measure the range. I would set a take profit. In this instance, because we have a sharp move there, I would actually set a take profit at that sharp low, okay, which just so happens to be around the 90% mark. And then I would simultaneously trail my stops at the same time. So that is West Texas Oil. I'm going to move on to the next one. Just tidy that up a little bit. So next one, and being mindful of the time as always. So I've got an alert to see if we push below the area of interest. If we do not, then I will not be placing a trade on this pair. So Aussie Kiwi. So Aussie Kiwi is a little bit more complex, but then that's usually the case. This is a pair that I like to, when I'm practicing pattern separation, separating structures, this is a good pair to pattern separate on because it's very messy relative to the other pairs. So you have to be more skilled, in my opinion, and experience to be able to trade this pair, just because it's harder to make sense of the structures if you don't know what you're doing. So we have this kind of this structure here, this with this 1, 2, 3 wave move. We fill all these near misses, which near miss to here. We finally tap into it, and then we move to the downside aggressively. Okay, this is where it starts to get a little bit more complex. Down here, you can see a near miss to here. Okay, and to some extent a kind of near miss to here. So what I'm seeing at the moment, given that we also have a near miss to here, is potentially a move down into this area, okay, which will give us more of that kind of structure, then to then potentially take out all these near misses to this high, and then potentially, because we would then have that impulse correction continuation, we may see a move down to here to take out this low, which this low near miss to, and then this whole thing would just be a middle section, a 1, 2, 3, before that move to the downside. We also do have to remember that at that point, this overall correction would be very wide relative to the move down. So potentially we could see a move up to here, a break above, consolidation, and then this becomes the M style pattern, where this kind of M style pattern, which is what happens when too much volume accumulates relative to the move down, and this whole correction becomes more neutral, and we end up pushing to the upside. So I'm just factoring in all of the variables that I've learned to see. You can see we have momentum on the weekly chart. Okay, as we drill down, you can also see that we are stalling. Look at this big green candle, big wick above it, smaller green candle, big wick above it, smaller green candle, smaller green candle. This is a deceleration in price, leading up to a sharp area where there was a big sell-off last time around, which implies that there's a lot of liquidity there, okay? And what you can see, that stall in momentum here. Look at this stall. We have that first drive, second drive, and I'm just seeing this as a third drive into this area, which just so happens to be retesting the back end of all of this consolidation for a potential move down to here, which would give us that 1, 2, 3 reversal structure, and this would be the middle section for then that move to the upside, which I was talking about. Okay, so just factoring all of these things in. So with that in mind, this is actually quite simple. You can see I've separated the structures here. We had this middle section here. We come back up, tap the high, okay, move to the downside. So what I'll be looking for from this pair, quite simply, when I saw this little move here, I wasn't fooled by that, because if you just look at the time, that was Friday, that was late Friday. This is usually just people closing their positions over for the weekend. So I thought what would likely happen, and it's exactly what did happen, is that we would then see an aggressive, maybe 1 hour candle like this, which then comes back up, just because this was people closing their positions for the weekend. Okay, so with all of that in mind, what I'll be looking for is the following. I will be looking for price to tap into this area, push down, and then I'll be looking for either a 5-minute continuation as before, and then I would look to get short on the break, and I'll be able to manage it down to this first inflection point for something in the region of 2.5%. If we got the 15-minute continuation as a minimum, then I would look for a 5-minute risk entry within it if the 15-minute consolidation was structured, or I would look for a reduced risk entry on the break. And then what I would do in this instance is I would once again use the mechanical management tool. In many respects, this pair actually looks better than West Texas Oil. It's just the higher time frame structure which looks a bit more, a little bit more indecisive, which is partly why I prefer West Texas. But in this instance, I would once again set a take profit at the 90% rule, which just so happens to be just before this sharp area of value there, and I would trail my stop loss accordingly. And then I would have potentially something in the region of at 12% to work with on this pair. So that is Aussie Kiwi. Moving on, I have an alert set just below the area of value. If it does not trigger, then there's no need for me to check this pair at all. That's as simple as we need to keep it. Okay, so on the higher time frames, this is Kiwi dollar. So on the higher time frames, you can see that we have a near miss there to this high. So at some point, this will likely get filled. However, if we just look at the move up from here to here, okay, so from here to here, we have retraced over 50% of this move. Okay, we've retraced much more than that, suggesting to me that this is not anything to worry about at this moment in time because of how much of this leg we've actually retraced. You can then see that we have a low here, which near missed to here. I don't necessarily think at this moment in time we're coming down to here, because if the DXY, which is the dollar index, is positioned to go lower, at least for the short term, then Kiwi dollar would push higher. But that doesn't mean we can't capitalize on a shorter term move in the meantime to the downside. You can see I've got my arrow there. Okay, you can see that we have this last week's weekly close was very bearish. We do have a bit of a wick underneath it, suggesting that it might consolidate for a little bit. Okay, you can also see that we tapped into this area. We did near miss to there. We have a completed piece of structure here. We have these highs here. Price breaks above, moves to the downside. We then end up with this expanding pattern. Okay, we scoop back up. We take out this high here. Okay, we near miss to this high. We break above, push to the downside, and then we see that impulse correction continuation to push lower. So I'm just seeing this. If we just zoom in a little bit, I'm just seeing this because we also have this. We have this impulse correction continuation. Price leaves a footprint, pushes down. We kind of near miss to this area, come back up, take out this high near miss too. We do so in the form of a reversal structure with 1, 2, 3 drives. We then completely drop out, And I'm just kind of taking advantage of the Kiwi weakness, because if you look across the board, the Kiwi dollar itself is particularly weak at the moment. So I'm just seeing this as a potential impulse correction continuation to potentially take out this low, which this low near missed too. So this is a potential shorter term move just because of how the DXY is positioned. And you can see what happened here on the lower degree. Same thing again, the same psychological patterns over and over again. We leave a footprint, we come back up, we near miss to it. Okay, we kind of have this structure here, which fails to commit. We hit the 90% or the base of this and then push back up. Okay, so what I'm looking for here is the following. I'm looking for price to tap into this area. Okay, and I'm looking for a push down, and then I'll be looking once again for that 5-minute continuation, which I would look to get short on the break of, or a 15-minute consolidation, which I would look for a risk entry within, or a reduced risk entry on the break of. And in this instance, because of the DXY's positioning and this sharp move down followed by a sharp move up here, where we could pull back quite deeply, what are we doing is I'll be setting a take profit at this low, okay, while simultaneously trailing my stops, and that would just be a little short-term move. Whether we get that or get it by the end of the day is another matter. But moving on to dollar CAD. So dollar CAD, this is a little bit of a hedge, okay? This is a slight hedge, and this is partly, this is the slightly higher risk position. So you can see that we kind of tapped into this high here, we pushed down, we tapped into this high, but we near missed to this low. That's a factor in my thinking. But as we just zoom in a little bit, you can see that we have this low here. We come down, we near miss to it, come back down, break below, push to the upside. We near miss to this high. This is slightly more complex, that's for sure. We break above here. We move to the downside aggressively. If you look at, we have quite a bit of momentum on the weekly chart, but quite a bit of wick above it, suggesting that we may consolidate a little bit. But you can see that we're gravitating towards these highs here, where there was an area of consolidation. Okay, we're moving up in the form of non-progressive price action. We have a near miss here to this high. Okay, suggesting that we'll come back up to take that out. So I'm just seeing this as potentially a 1, 2, 3 to take us up to this high, which this high near missed to, before a move to the downside, okay? Which would be in alignment with how the DXY is moving, okay? If we just zoom in ever so slightly, I'm just in this instance, this is another short-term move that I'm potentially taking advantage of. You can see we've near missed to these highs again. So I'm just seeing this as a potential impulse correction continuation to take out these highs, and then we would have that, and then I would look to get short from there, okay? So if we just analyze this price action here, you can see that we came down, price left a footprint, it failed to commit, likely because we're likely going to retest the back end of this. So I'm just seeing this is the kind of FOMO channel, people getting trapped into the buys too early. And what I'm seeing is price potentially coming back down to tap below this sharp. The fact that this move is sharp suggests there's liquidity there. The fact that it near missed the retest of all of this suggests that we may break below, push back up, and then flag, and then we could potentially take advantage of a move to the upside to then give us this kind of 3-touch structure, and then this would be the middle section. Okay, with all of that in mind, what I'll be looking for from this pair is the following. I'm mindful of the fact that the longer this consolidates, the less likely it is that we'll get this entry, and the more likely this becomes a bit more complex. But what I'll be looking for is a tap below this area, tap into this area of value, followed by a 1-hour impulse up. I will not be looking for a 5-minute continuation in this instance, because this trade is slightly on the higher risk side, because we could easily just drop out. And the reason we could drop out is because we do have to remember we do have a kind of 1, 2, 3 touch structure. So it would not look abnormal to me if price just dropped out. Okay, so because it would not look abnormal, I'll not be looking for a 5-minute continuation in this instance. I'll be looking for slightly more weight and a 15-minute continuation, and then I would look to get along with the 5-minute risk entry within it, or a reduced risk entry on the break. So I'm just looking for price to tap below, tap back in, consolidate for a little bit longer to give me extra confirmation because of the risk factors involved, and that's what I'm going to be looking for. I hope you've enjoyed this video, and I will see you again in the next one, which will likely be tomorrow. Thank you very much indeed for watching.